Gary. Good morning, Michelle and Carrie. All right, let's go into a small time frame and let's look at what's going on. Let me go back to MES. MES is setting up for something that hasn't, well, the market's setting up for something that we haven't seen in like 3 or 4 weeks now. Um, and this is a different look than what has happened. Um, let's go back 20 days. I went back far. All right, here we go. So usually what we have at the beginning of the week, everything worked out like the beginning of the week, right, Dobbs? We ended up at the highs and it started selling off. But during this,
And it couldn't have worked out any better. Script. I mean, we scripted it,
yeah,
no
but
doubt.
this week it did something different that it hasn't been doing every other week. This is the beginning of the week, and usually we make our Monday high or Tuesday high, right? And then we sell off to the lows, right? This week we did not do that. We came down to the lows into the bank. I think this is the bank. No, this isn't the bank. Is it? This is the bank right here. This was Thursday, the bank. This is the bank failing down. And then we did a high, and we should have been, we usually, by the end of the week, right now, we're like down here.
Yep.
We're like
Yep.
near this area and trying to
We
stay up
held
here
we held the lows.
and going that way. And now we got above halfback
Yep.
of the week. And ever since that, we've been trending upward. If we were supposed to fail, right, you have a lot of things in this chart. This is that halfback of that big candle. This is the halfback, the daily big candle. We were on the path for down here until I think right here. No, it was here. Was London, UK saying the 50 basis points. Sold off, they grabbed the low and ran it up. Then this was into the end of the day was during this period was we're bailing out the banks right here. And now we're up here. So this whole move is kind of saying that hey, 50 basis point market gonna go up, went above halfback, held it. This is hey, we're bailing out the banks. So they're anticipating that the feds are actually gonna be um, more are gonna keep on increasing interest rates. This was them anticipating the Fed saying, "Hey, we're gonna stop raising interest rates," and this move down was headed this way. Which one, two, three. This is 50 basis points on UK. This day right here should have been this move down here, right? Because that's usually what it's been doing, at least towards this area, and maybe do something like that and then come back down. That's usually what it's been doing. All
But it did this. Instead, it did the 1, 2, 3
yes,
this way
and
to
changed
the
it up to
upside.
the high side. So do I think that we're going to come down a little bit? Yes, possibly. And then let's break down the day on each range. This is just the range from Friday, but every day's range, we were tapping the highs, coming back to lows, tapping the highs, coming back to the lows. Um, we didn't really have much of, well, here we had range right here, actually. Did we? Let's look at the range here. That was the range. We went all the way down. We hit 200, right? And then we came up and we hit 200 on this day. Just doing it by year, by just doing it to put it in here. We were still in the same range though. We hit 200 to the top side on that day, but we pulled back and held here, right? And then in this day, no, this day we took off and really did all that. But let's do this day right here.
I mean, basically, we held the lows all week.
Yeah, all week we did something different. If you go back to every week from the setup, you start seeing it that the progression is for the upside completely. It's very dangerous what they did, and we almost hit this 200% up here, which was our 24. So once we held, what was it? We came down to 54, I think was like kind of low, roundish. Uh,
Yeah, 55 held, I think.
55 held right on this drop. 55 held, and it was literally right here around this lows. 55 held. We went up to 90. We went up to we went up a lot actually. We went up to 24 and then we came back and then we started holding 96 on this area right here. Yeah, right here, 96. And 96 went to 96 instantly. And now we pull back and now we're trying to hold 54 again. But they purposely ended this here on the weekend, like for because look, 200 failed, 200 failed, 200 failed. But look how we were wedging up. We talked about it on the recap video.
But let's understand before you move the chart, let's understand why it moved 300 points on number three, because it was number three. This is the reason why we got the 100-point move.
Yeah.
It's always on number three.
Is the bigger move. Now, can we have a pullback? Now, people are probably buying this off the 200 and selling it. Can we pull back? Yes, we could. We could come back here and sweep this daily low, pop back up into New York, come like this, and then just take off. It all depends. Now, where we're at the ranges is kind of interesting because if we're looking at the weekly range, right? That's the beginning of the week. Look where we pull back to. So if I put lines through it, and there's possibly something that you want to look at charts to see. The whole scenario is this. Where are we? This is big high. This is halfback. This is the low. So what are we doing? This is the first time above the halfback that we almost hit the high. We failed halfback and we're holding the low. So the scenario of this is possibly that we're going to go see that high. That's why I was kind of cautious on this for that sell in Friday because of how it was setting up. It was very, very dangerous right there. See? So if you got that whole scenario, can we possibly move to the high side? Yes, we can. Did we get much of a range on Friday? Absolutely not. We're literally in this little box right here. And it's looking like we're at the high side of this week. So how would you play this?
Well, we wedging again. Got the
Yeah.
fish head. Got the fish head coming on over here. Got a little angel fish.
So I think it might go sideways into Monday, or we'll possibly if this starts to move, we're possibly going to try to get to this high into the Feds. And it could be very look at this move is very parabolic. Like this is 100 points. They're buying it aggressively.
Think about it as this area right here, except micro, because it looks pretty much the same pattern. So it had a low right here, made a lower low, come up, and now it's holding right here. So
Yeah.
you're probably right, John. I mean, we might do
A little move to the top side, take
and then
that's that
go,
high. Yeah,
just like they did here,
yeah,
back and forth, and then make the move.
yeah. Go test that high. And the Feds are Tuesday or Wednesday. So let's go through a couple of things. I don't know. We got a lot of people in here. Michelle, Tangleweb, Monroe. Let me see. All right. Let's go through a couple of things that'll help you guys out. Let's look at a couple of things on the chart and let's get of understanding of certain things. Let's take everything off this chart. Remember, we're trading. You're trading as a day trader. You're trading on a smaller time frame to understand what's happening on it. So you could.
May have to step out a minute.
All right. You're trading on a smaller time frame to understand what's going on a bigger time frame, right? And there's other things we use that help us make decisions of where price is headed. But we're going to start off with Thursday, which is interesting. Thursday and Friday, which I said were pretty much easy plays. Um, let's do it Thursday and Friday days, and then we'll see what happens with price. Okay. Let's set up with the daily first. I'm gonna get rid of. I'm gonna go with ES so I can actually do this because this has a lot of info on here. Here goes ES. I'm gonna get rid of everything on this chart actually. These are my old drawings, everything with the hikes. It's gonna hurt to get rid of this, but whatever. Let's go. I didn't get rid of everything. Good. Still got to get rid of stuff. Okay. So first of all, does anyone have any questions? This is a little questions. Let's see questions. You guys hear me call prices, and people DM me with questions that we can't address during the day, especially when we're trading. And we might give you like a half-wit answer sometimes. What I like to do is I like looking, like I said, I look at a bigger time frame. I trade off a bigger time frame. Why? Why do I trade off a bigger time frame? Because I'm looking for a more concrete move. That's all it is. So let's start off with Thursday's range. Let's start off with this range from here. This big drop scared everybody not to buy, right? Let's see what happens when we put our ranges on here, when we put our London's close and everything on here. Let's understand where we go. Okay, let's do this whole, because we're buying and we're selling no matter what. It doesn't matter. When it tells us to buy, we buy, and we have a measurable risk. Let's do our ranges here. And you gotta understand they sell and buy for reasons. Okay. As you see it into the close, we went above halfback, some big move up, right? You got to understand what time is this at? This is at 3 o'clock p.m. Eastern, right? Some people may have different times. It doesn't matter. When you see a move like this is usually a BS move. This is them trying to save the market so it doesn't drop all the way down here, which would have led us down to our low side. So they were saving the market at the end of the day right here. They saved the market, all right? Or maybe people are really heavy and then they covered. Regardless of what it is, they were selling up here. We know they were selling because London's close was up here, and we had the 200 up here. So when you see a move up like this, we can't necessarily say that this is a sell because they sold up here. Because if you look at it, you're looking at even this is a 15-minute chart. This high, low, we're above halfback. Are you looking to sell up there? No. You possibly want it as high as possible. What we do is we break down the market into small time frames until they start selling. They only have a certain amount of time before they could hold on to this market. That's really what we do. All right. So how we take this for scenario is that I take 30-minute candle, high, low, right? And that will predict my range. What are they doing? They're buying the lows still. We're not coming down here. They're trying to get up here. They want to get the same price they had up there, basically. Right? This candle right here is very important. Why is this candle very important here? This candle is super important. This is 11 o'clock my time, right? At 11 o'clock my time, this is what I call a halfback. This candle is a halfback for me. And the reason it's a halfback, it's not based off of where it's located on a chart. It's based off time. So if at 9 o'clock, this period right here, right, this candle right here, you started a candle, a 4-hour candle, right? At time, this is your halfback. So look what it did. It went up high and then they sold it. So at this period, why wasn't price above it and we went to the moon, right? They sold that time and then London sold into it. London said, hey, right now we're at the highs of a 4 hour. We're going to go back down and look. They took out the low. In fact, into the close, they want it priced down. So that's a halfback for me. You break down times like that, you're going to see that those are all halfbacks. Not this one, because that's the beginning of the candle. You don't know where that's going. When a candle starts, it's not a halfback. It's just the beginning of the candle. But this is literally saying that if they were going to sell, they were going to sell up here. And the way you could kind of confirm that is you go on a 2 hour chart. Look at the 2 hour chart. So going into Asia, right? What price do they want to get? They want to get the same price everybody else was selling. Now, this is the high of a wick. Yes, it's the high of a wick on smaller time frames. But look where they start selling. Now, there's a set specific time that they were selling. If you go back to that candle, if I go back to that candle, guess what that is? It's that halfback. So when London sold it, everybody else got the same price. So let's go across. Let's see who got that price. London Open, it was right there. This is 2100. This is Asia's real open. Where did they take it? Right? So now I divide the every market into times for their halfbacks, right? This is a halfback right here as well. There's only 3 hours between 6 and 9 Eastern time. It's only 3 hours. So I usually use that time frame, right? And then the next 4 hours is right here. Look at the same market. Next market at their halfback, look what they did. 3 is London's open, right? London's open. Look what they did. Guess what 3 is? It's a halfback. Guess what they did? Boom. What they do here, they bought it to get it up to the same price that everybody was selling. So what did they do? Were they buying or were they selling? Where the high on the chart is up here, but what price were they selling at? Take that into mind. Any questions? Because I'm not going to cover this again, and I'm going to get rid of all this right now. I'm going to go on to the next day. All right, no questions. It's the time. Oh, wait, there is questions. Dang. Oh. Can't see the time. Did you get it? You see it now? All right. That right there is very key. How do we know this will continue too? How do we know this will continue, right? Remember when they say the market, right? Into the close, this candle right here is a halfback for me. This market should have tanked on this day. And the fact that they did this into our range, and that's why our range works, it keeps you in line. If this was going to tank, we should have never been right back above this price. Why? Because our range closed at 1500 and we went the opposite direction. Look, they sold it here. They sold that halfback. And look what ends up happening. Is this normal in a mark? Absolutely not. What did they end up doing? They wanted this price. They wanted this price. They wanted this price. This market right here was like, hey, let's get it to that price. They all got the same price and sold. Now, they were anticipating UK not to raise interest rates. This is UK, right? They raised it. So going into their meeting around here, like it was like 5 or 6, right? They raised it. And then let's go on a small time frame and let's take this in consideration right here. That high, that low, right? And let's go on a small time frame, see what they did at that time frame. If they were going to save the market and it was going to go opposite direction, It should have been at that time. And look, came to the low, bounced to the highs, and rejected, and got sold off some more into 7 a.m. So they did get their sell from here. They anticipated maybe they were gonna, the fact that they were gonna raise that interest rate, or they weren't. They were ready for the report. They ran it up into the report. This was a sell. They had the price to sell, and they sold. When they said that they were raising interest rates high to 0.50, they sold more because they have to get to a time period. 7 is another halfback. Let's go back to that day, the same day, right? That's 7. 7 at the lows. We always talk about it. 6 Dobbs time, 7 my time. They were just accumulating orders in here. Hit. Look where we hit. It's already at the lows. Sold the highs, and they end up buying the lows. All week long, they've been waiting this. Once they said that they were going to increase interest rates, boom, took off. And they keep doing the same thing over and over again. Realistically, keep doing the same thing over and over again. It's the same scenario, right? All right, so let's get rid of that candle. We don't need it. Let's get rid of this stuff. And let's do let's do this move Wednesday into Thursday. Set up the range, and let's see what they end up doing. Now remember, those candles are just for you to see where the 2 hours are at. Okay, to see what they're doing, where they're ping ponging this from. All right. It goes our 11 o'clock candle. Now, if we were going to tank, we should have gone below London's close, right? This is 230 candle. Just leave that a little bit closer. Just leave it as a star, whatever, right there. Leave it like that. Yeah, we should have gone below that price. And then this candle too. Okay. See how we held the high? We held the high. They were very bullish. $19.30. Right? They'll always return back to these prices. And we're going to do 2,300. Okay. All right. And our 7 o'clock candle. Remember, this is big time frame, so it doesn't look right when you see it as it goes. And let's do our ranges, and then you start seeing what they're doing. The range is very important, but this day we didn't have any range, right? All we're gonna do is take the previous day range, right? This high right here, slow right here. We're gonna flip it around. Remember, failed the 200, came back up, hit the 200. Return back to London's close here. Yep, high, low, halfback. Now, remember, when price is very congested like this, like you see how it's tight, this is why London's close range will help you out. London's close range helps you out drastically. Drastically. Like if you're shorting here, you know that this is not going to continue if we go past halfback of London's close range. That's why if you have this on a chart, you could see it. Okay. The whole scenario is we dropped, right? Look at that big drop. Ooh, coming down, right? This was 50 basis points into this area. I think in the morning they said we're bailing out the banks. Yeah, that's what it should have happened. We're bailing out the banks. They said, oh, they're bailing out the banks. They accumulated orders here. Yeah, they accumulated orders here to do this rip to the top side. Because look, how many times are we gonna fail this 200 on this week and not go below it? 200, 200, 200. Saved it. Yep, exactly. They saved the market this week. And remember, they're saving the market for a problem. That means that they're not saving. It's like a savings account. They're saving it for later on, for the drop for later on. Doesn't mean it's not gonna drop. It just means it's not gonna drop right now. And now with the Feds coming up this week and them possibly doing the same thing that Europe did, Europe said, hey, we're raising interest rates. Look what we did. Low, high, halfback, boom, took off.
See, we're day traders. I mean, it's good to know the overall big picture, but we're day traders.
Yeah,
so we're going to do what it does for the day.
Yeah, and the London close range will keep you in check of this. So we did a high. Look at the rotation of it, right? High, low, halfback, boom. Failed halfback. Failing here. No. We're going to save the banks. Boom. Okay. High, low, halfback. That's a rotation to the top side.
Same thing.
But they rotated to the top side now.
Right.
If we should have
because that's what it was supposed to do, what they're showing us here.
Yeah, so they flipped it. They flipped the market this week doing this. They said that they weren't going to bail out the banks. All these banks came out and bailed them out. If you look at the spreadsheet from the Feds, they took out $300 billion. Anyway, let's continue the scenario, right? I think on Thursday, I said, hey, 17 is key for this thing, and it could go for a massive ride down into the open. Look, hit 17, the halfback of that damn price right there. That's why I'm calling them numbers. I say, hey, I call it right here, 17. If we don't get above it, this is night. Look what they did. Both flipped the market completely. This was literally supposed to be a tank. This move up was supposed to be down. So understand that with London's close range, you have a scenario. That's why I say don't play the open, right? Once this flipped to the top side, I said, this is easy money all day. You could have took any play here long and won. At the end of the day, we were at the highs. Look, end of the day, 4 o'clock. This is a 30-minute chart. You could have bought any low on a 30-minute. Any low. Just put an order there. Put an order there. Put an order there. Put an order at all those lows. Put an order there. Even if you put an order here and it pulled back, at the end of the day, you were still good. That's why I said this was an easy day. I was like, there is no excuse for this day. Plus, we broke out 151 both days, like from 2 days. The 151 Asia range was broken out completely. Okay. Darn. No. Okay. We were still in the same range. Look. Still in the same range. So when it comes up here and the whole number, let's do a scenarios. Where's London's close at? Where's the candle? I kind of say it's a halfback right here. My halfback candle, right? This is a halfback candle. Look out. Look what it did. The same thing it did the previous day. It pulled back to that candle and then went right above it to the highs of that candle. Well, no, sorry, this was a different scenario. It pulled back on this candle right here, this 1930 candle. Pull back as far as it can, right there. And then going into a market open, what they want the highs. They want that high. Market open, they want that high. There was another scenario up here, which is, let's go back to it so you guys see it. Right here. This price right here. If you go back on the chart, you go back on this chart and you pick that price right there where they started selling it from. When is this? Look at the date. Thursday. What happened Thursday? The banks. This is 9, right at the highs. Banks, 9 and halfback at the same price. It was 4 hours of nothingness. There's 2 hours of nothingness, and for the next 2 hours they sold heavy, and they kept selling into the close. Take that into consideration. This is our 1430 candle here at day 2, which we actually look where it's at, 2 at the 200, right? That was our target to go into it. Almost hit halfback with time. Boom. This is the candle we went back to. Put a line right in between, somewhere in the middle of this. Same price. Same thing it did the prior day. What were they doing? They were getting all the way up here. Why? Because we went above 200. Where are they going to sell? Where do we want price? At the 200. Because all week long, right? All week long, hey, 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 we're about to break down. Hey, no, we're going to save the market. And then right here, we have this setup where, hello, we just did high, low, halfback. Now we got high, low, and we're close to doing halfback here again, which will project the market to an upward movement, which the year literally was, the year is usually telling us that.
Yeah, they're coming from up here now.
And remember what we were looking for. Look, remember I kept saying on the videos, I keep saying it. You see these days? We went below halfback. Look at this day. Can we possibly have that here? Yeah, we're holding all these halfback, held this halfback. Look, right here, we're a little bit below, waiting on that news. Can we get a big candle? That is a big, this is the biggest candle we have right here. This is a very bullish candle.
So double that one, and see where it goes.
This candle?
Yeah.
So I don't like taking the wicks. So I'll take the whole body, and the body projects it to sweep that high. our halfback is up here. Yep. So, and this is the area we have, but remember, we haven't had a bullish play like this in a while. So if this becomes very bullish, it into that Fed meeting, you're gonna see the price could possibly get all the way up here instantly.
Mm-hmm. Yep.
It could possibly keep going. The thing is that we know where probably
it can go at least 100. I mean, at its max, it could probably go 140. It's been a while since it's ran 200.
Yeah, because if they're feeding the market, we understand that if they're feeding the market, that means that they aren't ready to let this drop. That means that if they're giving people money, it's gonna.
But they ain't gonna let it run too fast to the top side either.
Well, so the thing with the whole scenario of this is that they're bailing out these banks, right? These are big companies that are gonna get money. So they're gonna get money and sustain. They're gonna continue doing the same thing. Like it's not. It's delaying the process of what the feds are doing just to save big companies. And if they're doing that, the market is going to find that bullish. They're going to be like, well, if you're feeding the market, right, and you're supposed to be letting money out of the market, which they were, how is the market going to adjust itself? How's inflation going to be under control? When people make mistakes, you're just going to bail them out. It's putting money back in the system, not taking money out the system, and that's what they're supposed to be doing, taking money out the system. So we'll see what the feds do. That's why we set up. So regardless, the little scenario, regardless of that move, the scenario we have right here is very crucial right now. Right now, and so take this for also where we're at, right? Let's take these candles. Take these candles. Yeah. And are they selling it or are they buying it? Because when it came underneath, they bought it. When it came over here, they bought it. Where's the candle? Our last candle at? Right here. That's why I said it was a sell at the open. I said it was the same play as previous day, right? But there was a difference in this day. Previous day, right? We hit the 17, and then look at this big candle. Friday, they didn't let that happen. They wanted to buy it. Everybody wanted to buy this. Look at that candle with this candle. You go on a small time frame, and you take this candle, you see that they sold it. This was a literally sell fest. Like it went to this candle, went to the high, went half back and failed. And it just became this candle. So when it came down here and did this, I was like, the same play, except a little different. When we hit, I think I called out this price, 97 or something like that, or 87, and it just sold off. I wasn't really interested in this because I was like, it could just hold here or it could go to the moon. They could do whatever they want with it. But this is going to be a fight here because of the 200. Wasn't very interesting. But we're also below, where they set it up right here, we're below that big candle's high. So they have it at a crucial spot where they could drop this very heavy. And if they drop it, we're going to take it. They're making it seem like that. So everybody could be this is the problem. Everybody could be very short on this, right? And they're letting that happen. These prices are telling me that they're not letting it happen. And guess what, everybody else right now? Everybody's probably heavy short because of that big candle. This could create a huge squeeze because of that big candle. Because this isn't the first time where we've been above this candle. Well, this week coming up, I mean, some people be cautious not to be trading heavy, especially do not trade into that Fed meeting this week. This week it's gonna be a bloodfest or it's gonna be a squeeze fest. One or two. It's gonna do one or two. It can only do two of them, but it's not gonna be a regular move. It's gonna be a big move happening this week, and you could
We've
tell.
had one move above that candle. This is the second move above the candle.
Yeah,
this will be number 3 if they go.
Yeah, and look at last time they did this. Boom, it's a big candle. Big candles. So
They're already telling you. That's their clues. They're already telling you they want to go up.
Yeah, they're telling you. So be mindful that the market is going to get very volatile this week. The VIX was out of control this week, right? The VIX is out of control this week, right? With all the news, right? The VIX went up to 30, and we didn't even drop that much from this. We didn't even drop that much.
So now this candle right here is going to be very important. We got to hold this yellow candle. We got to hold half back of that candle. We got to get above it and hold it for that move to go.
Well, the thing is, when the Feds do these reports, it's usually going to do a big move. So it's going to do a maybe 100 points, easy. We're going to have plays off of it, but just be cautious this week and don't trade into those Fed meetings. I'll tell you that right now. That Fed meeting this week is going to be very, very crucial. If the market starts to tank this way, right, we still have to. The next day we're going to have big plays. It's going to be there. Don't think that this one play is going to happen this week is going to be, but where they put it, this is indecision, but the chart is telling us that they're going this way. Everybody is right now is positioned this way. I guarantee you that right now. Everybody as a retail trader is positioned to the downside.
Yep.
They're like, yeah, I'm shorting above the 200. Okay, it could go down.
That's possible. Yeah. Because you got one drop, you got two drop. It could, but look, we've seen reversals happen all the time on two drops. So it can definitely reverse.
Yes. This week is going to be very, very volatile. It's going to be very into that Fed. It's going to be very volatile.
And
Wait
usually
until
when it makes that up move, it's on a two drop. So
you saw me on Friday. I'm usually in the chat, and I wasn't saying anything after New York. I literally was like, I have no clue what they're going to do here, but they are positioning themselves very heavy here. I was more cautious of it. I did take a little sell, I think, on the drop. I took actually this long right here. I took London's close long because I'm still thinking that anything underneath the 200 is still going to be a buy.
if you drop down to a 5 minute, it might really show you what they're doing. It might be showing your low, high, halfback sweeps going
See,
to the
look,
top side already.
This is London's close, and they didn't sell.
Nope.
Look at that. It almost got to target. I can't say it hit target, but I took it long and this hit instantly. It was very volatile to get there because it went very quick. Like it literally was, I was like, oh boy. I was like, but I only took, as you heard me, I'm taking a mini. I took a mini, boom. I was not trusting this at all. You got to understand that when the market's at a certain points, you can't be like really heavy. You can't have high risk with it. Um, but the scenario that London's closed and we're above halfback. I mean, what are you risking? Halfback. Same difference in everything. High, low, halfback. Where are we going? Above halfback. What am I doing? I'm going long here. Boom. Got 5-10 points. Now look at the ranges too. This is London's close range, and we were tight before, right? Now if you look at the high is 49, the low is 32. That's literally 17 points. So the move up from halfback to here is 8 points. Can you get 5 points from here to here? Yes. Above halfback, we got 5 points instantly. 42 to 50, 8 points right here, just here. Do you have to take it all the way to the highs? Absolutely not. You got to get 5 or 10 points. But if I'm taking it long here, right? If I'm jumping in long here, wherever this candle's up above here, this is my risk. I'm getting the hell out of this. I'm not adding to it as it comes down. You know what I mean? Maybe possibly waiting for the halfback to hit, but it didn't. And that's another thing too. The fact that I ain't hit a halfback, came back here and now held halfback. This was another long.
Yeah.
Because
Clue.
it didn't hit
Definitely a
halfback.
clue right there.
That means that they just keep buying this price. They're just London's close was just buying at they cover from their short and they just bought. They were just like, I'm getting out of position.
Yeah, they're just filling orders down here. That's how you got to be mindful of. They're coming back to get orders filled because it's probably going to the top side. So,
I mean, how I play that 4 hour, right? Was it? Did we hit our sell to down? Yeah, we hit our sell. Look, we didn't go below it. Another thing is this scenario. Look, held that low range. If we were going down, it would kept going down. And you see this. This is why I do the 30-minute, right? 11 o'clock, we're at the lows. From 1300, this is it's halfback. We're at the lows, but we're holding these areas. So that's like 2 candles right there. We go 2 hour. They're holding the lows. Is it going to keep tanking? Possibly, but they weren't letting it go there. Why? Because we were above them those two right there. They just kept buying. They kept buying the ranges. Can it dip down? Yes, I do believe that in Asia, these people are buying because of options. They'll come down and sweep the daily low. I do believe it'll do that. I do believe we're gonna go and sweep this low because of where it's at right here.
possibly, but the only thing is they swept that previous candle.
Yeah,
That's the only thing that I see because it just dipped it just a little. So it may not. It may not
it
come
doesn't
back.
have to, but take that mindful that if we do sweep that low, right? If we sweep that low into Asia, right, and they get people trapped for that short, it's gonna come back up to those prices in time. That's where time takes place, right there. So some people say, "Oh, I don't get what time is." That's time right there. because that is price right here. So say that we came down. Where's our low at? This is our low. Look out, it's not even that far away. It's really not far away, but we're below halfback. So if I go on a daily, right, this is the only reason I say that we could possibly go down there. Ah, boy, I hate when I do it. That's the last thing before we wrap it up. I covered a lot. It's going to be recorded. I don't know if it's available to everybody, but that's facts. So I can't do nothing about it. Let's just do this. And it's the weekend and my family's getting up. So I got to start moving fast on this. Boom, right there, right? We got halfback. We're below halfback. So we're at the bottom of the range, right? Can we sweep that low? Yes, we can, right? So that low is perfect. Look where halfback is at, and we're underneath it. Can we gap up? Yes. So that would be our plan to Asia. They could get people more to sell this into it more. They could. We could have that move. Where did that halfback go? Actually, we're at halfback. No. Did I just?
You're already at halfback.
No. I don't think I put
A
it.
halfback.
I didn't put it. I'm a big dummy. Sorry. I want to put the halfback. Oh, we are at half. No, we're not half. But look, halfback's right here. Just it isn't showing up from here. Right. We got high, low, halfbacks. Just if you go on a yearly and you set it on that and then you put it close to price, it's like 5 days ahead. So there. Yeah, you see, I delete all the stuff off the chart and I go back and look at it. Why? Because I want to understand what lines are which. The colors aren't right now on my chart right now. So I definitely will go back. So you see where it was? This is exactly the scenario that we were facing on Friday. This is the high. So even if you did London's close range and you took this, you knew this is the high on the daily, right? We're fighting halfback, right? And this is the low. Can this dip down really hard down here? We've seen that before. And then it does this move back up. Now, into time, if it does that move and does this, is it a possibility that we are going to do it and come back up to this 7? Yeah, that's going to be our target. The more down it goes, the more they're going to try to run out. But
remember, it's a new contract. So
yeah.
what do they want to do? They want to buy lower if it's going to continue to go up for the month, or do they want to sell it to go?
Yeah, because even though it
Or
did
want
this
it to go
high,
higher to sell by the end of the month.
because it did this high, low, halfback held here, it could come down here. It's not breaking this low. So it could come down here and then bounce up. It doesn't have to stay down here. If it comes down and pops back up, guess what?
But
it's just a wick.
Price tends to levitate from double bottoms.
Yeah.
So
that's I mean,
the high probability is this way, but it could sweep down here. It could come down here, sweep, then take off. Take that liquidity. Still make a higher low because right here's our other low, so it could still make a higher low down here, going to the low.
Yeah.
And it's still going to be a higher low right here, even if it does come low, because you got a higher low from that.
Can you guys understand that they did this before when we were here, and it was like more than 10 days ago when the market closed.
But setup's going to keep you on the right side, especially the area 51s. That's why it's so important to have the Asia range chart and your London close. Remember, London close is your macro. It's king daddy. So whatever them lines are, that's what you're going by. Yeah, but Asia sets the table and it actually tells you the story going into it, because if you break area 51, then you know you're going to your London close lines.
I'm glad you remind me, because I didn't do it on the chart and I was flying through everything, trying to get everything done before.
Even if you waited, say, I don't know, if you just waited for area 51, if you just waited and watched area 51, it's going to tell you the story. No ifs, ands, or buts.
Right there. We have a lot of things that literally keep you in check of what these plays are.
And it's just a matter of watching it, screen time, It's why it's so important to have the setup on your chart, because then you see what they're doing. What did they do? They went up and hit the Area 51 top side. Well, what happened then? It failed it. Well, if it failed Area 51 top, where's it going? It's going to the bottom Area 51 of Asia. If it breaks out from there, it's a breakout. What did it do? It broke out. London closed range into London closed range bottom.
Well,
Very simple. It's not rocket science.
no.
This is the most simple method that I think I've ever seen.
Well, I mean, even if you took it like right here, the range, we hit the range perfectly at 39. So if you took the range, let's get rid of all this stuff because you don't need this. This is how you trade it for pricing, not necessarily where it's going. So when you want to get a better price, I do that to get better pricing, understanding where they're selling, where they're buying, because they're never selling the lows. They're selling the highs. And it's the same thing with this whole scenario with this. But they're selling the highs. They're not going to sell down here. They're going to sell up here. That's literally what this whole scenario is at, because this is halfback. This is 5 o'clock is the start of that candle, right? This is halfback. So if I took 5 o'clock, right, this 5 o'clock, and I took the low into that period, right? Guess what that is? Oh, this is price. This is time. It's the same scenario. That's all we're showing you. Time, price. Now you gotta take it for granted. And now look where it went. It went right to the Stingham line on a 15-minute chart. Low, high, this is where you want to sell. The high.
They had more orders up there. You got to understand what they're doing. They're
The orders
selling.
are
They got
here.
orders up here. It moved too quick for the orders to get in.
Yeah.
So it popped back up to pick up them orders.
Yep.
Stingham line is another clue. It'll keep
Now,
you in check. Below it is a sell.
now
Above it's a long.
all these little things we put on the chart are just clues and pricing to get into these plays, but they're literally in front of you. So it justifies the answer to where it's going. So if I go into a 2 hour, guess what we did there? It's just you're trading a higher time frame, right? You're trading a lower time frame and watching the higher time frame doing this. Look what it did. Where did we say on the recap video I was going to pull back possibly to these highs, right? Look, it kind of held the high of this low of this candle right here. It came almost low, and then they ripped it up, right? They wanted a certain price up here. They swept that 11 o'clock candle I showed you back over there is literally the high right here. It's crazy. This is the high right here. Look what it did. What are we doing? We're sweeping that candle on the backside of it, right? On the backside of that 11 o'clock candle I showed you, right? This is the halfback. This isn't the high. This is the halfback of that candle. The high is up here. Everything falls in line with it. We're breaking the market on smaller time frames so you can see a higher time frame to see where they're selling and where they're buying and price to get in. What did they do here? They swept a 2 hour candle. Why? Because this is the 5 o'clock candle. This is 4 hour candle right here. What they do, they bounced it up. Now this candle at the low bounces all the way up here into this candle. What are they doing at the open? They're just sweeping this high. What do you have? You have a set perfect price. What are you risking? Close above this high, close above Stingham line. We say it all the time. We are trading the market on a smaller time frame with a bigger time frame knowledge. There's no magic to it. We just break down the market precise to get these big moves. This drop, if you short it up here, right? This was 30 points. 30 points. Do we say get 30 points? No, because instantly when this thing went up here, you got 5 points instantly. Now, that's a little bit extra for the tank, but use the ranges and be mindful of how to do it. Adapt to this and you'll see how the market moves. What did they do? It went high, boom, got to where they wanted, and then they rolled over. They rolled over and it became a sell, came up here, boom. Look what they're doing at the lows. Look what we did at the lows. Or can we possibly come down? Yes, we could possibly come down here. Maybe hit halfback. Well, see, there's the problem too. Dobbs could be right about this.
I'm never right.
I don't know. Halfback's right there, and then it hit. But we could pop. The fact that we're at this 200, we've seen this before. That we've popped to 200 and they let it drop, and then it recovers. But in time, we play for what it is on a small time frame, right? Can it literally drop here and wick down here? It's not that far away. It's not really. This is on a 2 hours, only like 8 points down, and then
Yeah,
it
it
pops
could
back up.
definitely go hit that low. Like I said, it's still going to be a higher low with
Yeah.
them going to hit that low. So
So let's look
very
at it.
possible.
Take that, and look what they did. They saved the market that day. This is the move up. They're saving the market. Can it possibly do that there? Yeah, but can it possibly just? It could also just possibly stay here Monday into that report on into the end of the day and then take off
Absolutely.
and then come back to these highs. So this week is crucial. Everybody knows it's crucial. I'm letting you know it's crucial. That's why I really wanted to jump on here and
Yeah, it may just
emphasize,
do its normal range, 10 points each market.
yeah, and emphasize how this is going to be a week that it's it's make or break, but we're going to have a big move. You have to be careful this week. This week is very crucial because we really, I mean, we swept. Look, that's that 2 hour
But
right.
we're holding here. If we're holding here, that means we should go here.
So you see, this is that 2 hour that I was just talking about that we came up there to sweat. So if you see it, you see it. So understand when we break down the market within these 2 hours, I'm always saying, oh, that's the halfback right there. That's the halfback of that. So we went up here into halfback and we sold off. Sold off literally at 3. Look, London open where? At the highs. Where London sell? I mean, we're yeah, right here at the high. So London went to London and sold.
I mean, think about it. They're buying down here.
Yeah,
What are they going to sell?
the highs. But coming into this week is very crucial. It could go anywhere depending on the Feds. Feds come out and say, "Hey, we're going to pause on this interest rate. We tank down." We don't know what they're going to do. They could do the opposite of what Europe did, you know. But since Europe did it and we saved the banks, everybody's thinking that hey, they're going to keep on raising interest rates. We're going to continue this party up until they stop. Now Europe has done their own thing from the beginning. They started raising interest rates way before we did. Their economy was even worse than ours. So
Right. But what is public perception?
public perception,
Bad. Banks, bad. Can't
yeah,
get money, bad.
everybody's is probably selling into the contract at the
Markets,
beginning.
bad. Losing money, bad.
And if they're selling into this contract, right? The next contract's October, which we kind of talked about. The big drop is coming in October. The Feds aren't going to stop raising interest rates until they get that inflation under, and we're not under interest rates. So interest rates have to go higher than inflation. Inflation continues to go down and they meet together, that's when they're going to stop because they're going to anticipate the next month is going to be lower. But as of now, to me, it's still looking like what we keep saying since January, that they're looking to make this market go higher. Remember, we were at these lows, we were negative on the year. We were going negative on the year. So if you go on a year, we were negative, right? This is our yearly, right here. The market was going to go negative on this day right here. So on this days, well, these days right here, we're about to go negative. Period. Are the Feds willing to do that? Are they willing to make the market go negative? Is that a soft landing? Absolutely not. They're going to readjust and more likely if everybody's saying sell, 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 it's more likely going to go up, 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 up. And we're going into earnings too. So you know, we just finished our we're finishing up our first quarter earnings, and then we're going to start earnings again for second quarter. So are they going to sell until they start getting bad scenarios from companies? Yeah, that's when they're going to sell. But they're not going to sell at the lows. They want price higher. They're going to sell at the highs because if you take it back, and go back a couple years, they're not gonna, you know, they don't want to create a panic in the market. They're definitely not going to create a panic in the market. When the market panics, it goes down, the Feds feed it, right? Market goes down, coronavirus, they feed it, right? Same scenario. This is how people are possibly looking at this market right here, right there.
Okay, let's think about that scenario. Think about COVID, right? This whole move right here is COVID. COVID was bad, right? COVID was bad for the economy. Why'd the market go up?
Because everything was going bad.
Because everything was going bad because they were getting short in that whole move right there. That's the reason why price went higher.
Yeah, keep selling it to people. Remember, they have unlimited money, so even if they're selling, they know that they're gonna top it off soon. So anytime it dips down, they're taking, like a long-term investment. They're taking profit as it drops down. Every time those big drops came, they took profit. Big drops, profit. The move up takes forever, but the move up is 401ks and everything. So 401ks, okay, let's build up the 401k. Go, 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 go. Let's drop it and get money. So when they sell it double, and they allow it to go up. So they know when they're selling, but they're making extra money. And then when it started really dropping, this drop only started, right? This drop only started around here. And guess what happened here? First interest rate hikes, right? They're like, all right, first interest rate hikes. And then you could do dates of when they did it. Second interest rate hikes was like at the highs, right? Um, every time they raised interest rates, I think it was at the highs. At the highs, right? They moved it up into a report and then sold it, right? Around this period, they started saying, "Hey, we're gonna see if we move it from 50. I think it was 50, 75. I think it was first to 50. This was the 50 move, and then it started doing, hey, we're doing 25s. We're doing 25s. We're doing 25s. This was the last one, right? Right now it's like, hey, we might stop right here.
It ain't gonna stop.
They're like, we might stop and might break down the market, and then we're going into a meeting right now, right? They get another 25, is going to be like, oh, okay, let's prepare ourselves to sell this thing because they're near the end. Because this is near the end of the interest rate hike right here. We could possibly be at the end, near the end of the interest rate hikes. They possibly want the price up here to sell them. And that would be our head and shoulder type scenario. But they kind of messed. Well, right here will be shoulder. This isn't even the head no more. This probably be the head up here now. And then another shoulder to do lower high into August, going into September. September into October would be the big sell. And then we'll go into December and see the shoulder for the high or something. But the drop is going to be drastic. The drop is going all the way. The drop will probably come down here, possibly. That's what this is possibly where we'll probably sweep from that low down here. That's going to be a drop. Because look, that's the 100, and then we sweep this low, and after we sweep this low, then this is a buy. This is where we're buying down here, because this is COVID. Well, COVID is all the way down here actually, the high of COVID. I can't believe it's been 4 years already. Right there, that's COVID. See that high right there? This is the low. We are possibly gonna go up to these areas somewhere here. In this area is where we should be at. Because I'm sure they left a half back, right? I'm sure they left some price up here. I'm sure this area right
Yeah,
here.
I've got it marked on the chart somewhere. I have to go back and look at my 12
It's
hour
just
chart.
like right here, this day, this
It's
day.
not too far. I want to say 3180 or around 3200. Remember, 3000 has never tested from the top side. And I've been saying it and saying it and saying it. 3000 never tested from the top side when we broke 3000. Some of you probably can't even remember that day. I do.
3,000 far as
That
hell.
was a record day when 3000 broke. But that level has never been tested from the top side.
Yo,
And
look how bad the market got dodged on COVID. 2174. That is an insane drop. This was 4 years ago, 3 years ago. Who didn't buy? This is where this is opportunity to buy. We get a drop like this. This is money right here, Dobbs. Holy moly.
Because at that point, guys, it's just going to be buy probably for the next 7, 8 years once it gets down there.
It's definitely gonna be a buy. And you got to think like all the innovations that are coming out right now, all this industry with EVs, they're gonna flood the not remember when we get a big drop like this, it's gonna be a crisis. But what are governments gonna do? They're gonna flood the market with money. You get money. EV program, you get money. Everybody gets saved. Bail out here, bail out there, money everywhere. And then innovation. They're just gonna any bill that's gonna create jobs, it's gonna pass like butter. They're gonna be like, oh yeah, EV, boom, right there. Oh, you want to do this? Yeah. Oh yeah, they're waiting for this. They're just gonna print money. That's why they're taking money out of the system. That's why this whole move down is BS. Because as if you look at the Fed's balance sheet, they're preparing for the drop. That's why they're taking money out of the system. So they could go ahead and put money back in the system when they drop it. But once they start putting money back into the system, you better believe prices are going to continue to go up because they're doing the opposite. They can't prepare for a drop if they're putting money back into the system. It's one or the other. You let it drop or you put money back in. So if they're putting money back in, the market is going to go back up because they're not prepared to let the market drop. And if you look at the Fed spreadsheet, they put, I think, $300 billion in the market this week of assets, just in 1 week because of the banks. So they know the scenario. People don't know the scenario. People on YouTube, oh, bank crisis, and then a week from now, it'll be like, oh yeah, the market's green. We hit the bottom.
Buy puts now. Yeah.
And we hit the bottom. That's it. We're at the bottom now. In a week or two, when we're all the way up here, they're going to be like, that's it. The worst is done. The worst is done. We double bottom on the yearly. We looking good. The banks got fixed. We're going to roll into a good
buy
year.
calls, and what do you think's going to happen?
Yeah. Banks get money and they don't get regulated. They start doing bad things still. You're literally just giving them a pass on what they did. The market was prepared to drop everything. Say, hey, they're about pivoting.
They just did their job, and now they're getting paid for doing their job.
Yeah.
Same thing as the market does.
Yeah. Anyway, that's about it, guys. Just be cautious this week with the Feds. Understand, use what I just showed you. This video will be uploaded. I don't know when. But we did the recap this week. It was a good week. It should have been an easy week if you set up. Setup was key, right? Now you got a little bit something else in the tank. Do not use that to trade. Use it as a guide. It's higher time frames on a smaller time frame. Get your 5 or 10 points. Build your accounts. It's basically it. I don't like trading on small time frame. I hate it. I don't like it at all because if you trade on a small time frame, you definitely get 5 to 10 points, right? Higher time frame, you might be able to play a little bit longer to get more than 5 or 10 points, but you are going to get more than 5 or 10 points. Use what we gave you as knowledge. We did bounce off of something down here, came back up, and we went up here to sell. I did buy this long. I didn't stay in this whole move long, but I got my 5 or 10 points here. I also got a lot of points on the way down. Did I expect continuation? No. Just trade it for that. Trade it for a little bit. Look, is this telling you to go long here? Absolutely not. Was I long? Yes, because we in this room, there's opportunities to go long and there's opportunities to sell. But the sell was there as well. If you set up the right way. Even if you took a sell here, right? Or here and risk here. Now it's getting volatile, so your risk is going to be higher. So maybe you sold here and you risk up here. Did it hit you? No, it didn't. Boom, you got at least 30 points on this drop. And when do you have to close it out? Maybe when we hit the line again. Boom, right here. That's about it. Take 1 minute and do that. Trade it for where it is. Some time frames after this play is done, wait for 11. Is there another play to go long? Yeah, there was another play. Now, this is the thing with longer time frames. This is literally still in the sell, but there's London's close range. Guess what? We got 5 or 10 points. We had a measurable risk and we had a target and we hit. So is it always going to work in that sense like this? Absolutely not. So just be mindful. We also
Micros, that's very important. Micros. Think about it, guys. I've said it over and over, time and time again. It only takes $50 a day, 20 funded accounts to make 20K a day. That means you only need to make $50 and copy that trade across 20 accounts and you make 20,000 a month. It doesn't take much.
the other thing that happened there was that remember the range. So if you take the range, if you take our range, which if you set up, and that's why we say it's key to set up, right? Do you want to sell this low? Absolutely not.
No, that's retail mentality.
So if you took this long and exit up here, you're good. Are you selling up here just because of that? No, it has to show you a sell. But there was a lot of things like on Friday. I'll tell you what, I took this long, but I wasn't really keen on selling this because of where we were, that 200. And some days you're going to have to identify that yourself. That after, if you were selling, good here, good here, selling down here, absolutely no good. Absolutely no good. Is it a buy here or sell? That's why I kept saying in the chat, is it a buy or sell? I can't tell you. I couldn't tell you on Friday because of where it's setting up. We could literally just stay.
But what told you that it wasn't a sell? Because it's right there on the chart. What told you that it wasn't a sell down there? And that's a question to all of you. And all I'm going to do is I'm going to put a line, okay? Y'all tell me why it wasn't a sell no more. I want you to focus on this yellow candle right here.
London did not sell it at the lows.
High, look what we had. We had a high, low, halfback, sweep. That means we still should have been in that. We should have had a high, low, halfback.
I put that on the chart too. I put that on the chart this morning.
Right. And that was the turn. When we say we talk about the turn, this was the turn. And with them not coming back to halfback right here, that was the whole clue right here. This was not a sell no more.
Yeah, I put that in the chat on small time frame. I said, look, they're trying to turn it around. It's very dangerous down here. They did a
right
high
there,
halfback.
And
the fact that they didn't hit that halfback and came back to it.
Yep.
If you go on a small time frame, like say you went on a 3 minute, I said and I put up the chart. I said, look, small time frames, they're doing this high low halfback right there. High low halfback held right here. That's exactly what he's showing you right there. So high low halfback, and then on a bigger time frame, it did it, and it held this halfback. Boom, taking off. High low halfback held right here. Same shit. Boom, took out these highs. Taking out highs, very dangerous. And then came back to the same price right here.
But bodies made a higher low. See how they disguise it with the wicks.
Yeah.
So you had a low here on the body, but look at these bodies. That's a higher low.
Yeah. It came back to hit the 50-minute halfback that didn't hit. So on a bigger time frame, on 15-minute, now you're fixing yourself. See, look,
bigger starting to make the turn.
You came back to fix the fact that you ain't hit this halfback. And now let's go on a 30-minute, and that's all we trade higher time. See, look, 30-minute, you're holding halfback now. So right here, you held halfback, came back, now you're holding halfback again. So you held lower time frame, 15 minutes here, came back 15-minute, boom, corrected itself. And then boom, now you're holding halfback. Now we're above halfback of this big candle. Where's the possibility we're going to go sweep this high?
All right. So now you're above two halfbacks at the lows.
Yeah. So it's but like I said, where it's at is crucial. They could play with it. They could take money.
Yep.
They don't care.
Go either way.
Yeah, go either way. Where is that? Right now we're still in the same range from this, and we're still reflecting the range of the week. which I think I got rid of. Yep, I got rid of it. We haven't hit the high range yet of the week. Which is, let me set this up again. Is all we do. Every time we teach somebody or we do these classes, we got to set up again. And I put in the post, I said, listen, the reason we continue setup is because, what am I doing? It's better to continue setup. Just constantly do it over, do it over, do it over. Understand the lines. I'm on a 30-minute. Understand the lines, see what the lines mean. Start getting your mind used to seeing all the lines. And then write them down. I write down every line on there. I write it. Do you need every line? No, you don't. You possibly just need the high previous day, and that's probably what I key off the most. And then just those halfbacks. That's about it. You don't need much. You just need on this close range. It'll keep you in check. And then certain areas will keep you in check. Like this 200 will keep you in check. Say, well, am I selling or buying underneath? I'm not selling underneath. I'm gonna sell above it. But when it gets down to it, if it ain't going underneath it, it could possibly just do what it did, just stood at it.
Yeah, something else I look at too. They took out this double top. They took out this double top. They took out this double top. So I want to tell you something. If that double top right here holds,
It's
we're
gonna
headed up as well.
yeah, it's gonna go take out. You see,
And where are we at?
we
Are
haven't
we
taken out,
above it or are we below it?
yeah, and we haven't taken out this top right here. So the
And
the, the scenario is going into Tuesday into that high. So if this is where they
zoom out
close,
a little bit, we might have a double top up there.
that is it. That's the this high up here. I think we go into Tuesday into this high, right? And then this is the Fed meeting high that is gonna go take out. Because not that high though. Remember, this is that's that going into the Fed's talking in the Senate, which this day this day right here was projected to go take out that 40-50. But the fact that the banks did what they did, look at that big drop. So what did we
Yeah.
do this whole time? They're just fixing themselves to go back up here. So the possibility of the Feds coming out and doing that, and we just keep running, it's gonna slingshot really hard because it should have gone up that way. Um, the original fact was that they were gonna go take out that high, and then they got nervous saying, "Hey, they're gonna pause on this interest rate hike." UK didn't do it. The Fed just took out money out their spreadsheet to give to banks. Uh, it doesn't look like we're going to lows if they're not stopping with the interest rate hike. So we're possibly going to continue the same trend that we were on, which was to make a higher high. So be mindful of that. Right now, this is the first week that this did not sell off straight down. And this went into Thursday. So realistically, if you go back and you go back on days, right? Yeah, let's go back more than 20 days so we could see it. This day we went up, made a high, but we are holding the lows of the previous week. So this is Fridays, right? Went up, boom. Fed started talking. We went back down to the lows of this week. And then we were going to make our way back up to halfback at least. And then go into Friday and Thursday taking off these highs. That's the scenario for that week, which is literally what we did this week. So this is the low, right? Look, we went back to the lows into Wednesday. Same thing. Look, Friday. This was Friday. We went back into the lows. Boom. Into Wednesday. Into Wednesday. Right? And then look at the move that we made. This is the move that we should have been into this Thursday right here. Into this Thursday, what should we have done? We should have gone up and tested this high. Banks came out with that not with that stuff, and boom, they flipped the market to the down. It went literally the downside. It scared the market. And then now look, Wednesday, Thursday, boom, took out that highs. Took out all these highs, and we're over here. We're literally at what we should have been here until Friday, a pullback right here. And then what are we looking at? We're looking at taking out this high. Literally looks the same. It's just what are we looking at? Taking out this high this week. Are we looking to take out this low? Are we looking to take out this low? Are we looking to take out this low? Because that's not doing the same thing. Right there, look. We should have took out this low this day. It didn't. We should have took out that low this day. We didn't. Where's price possibly going to go? Up to that high. And it works out because it kind of matches up with the range of the week. Once we get to this high, remember, this is the range for the high. Held 96, going to 24. Come back, hold 96 up here at the highs again, right? Where are we going? 54. This 55, this high right here. Understand that the progression is towards that direction right now. Anyway, that's it, guys. We're done. We're out of here. I hope you guys got enough. Set up your charts.
Set up.
Set up. We do set up the weekly. Keep in mind, we set this in a video prior to this. The weekly range has been very important. Why? Because we keep going up and down, up and down, up and down, up and down. Sometimes we don't have a range. We don't have a range for Sunday. I mean, Sunday into Monday. Right now, we have this range right here that we're playing with, and it's matching up with this range that we're holding this low right here. So if we're between this high and this low, can we possibly go up there? Yes. I'm gonna get rid of this line. Can we possibly go up there? Yes. We're holding this range towards the top side. So take it as high, low, halfback. Right now, high, failed halfback, and we're holding the low of this range. And then we're doing the same thing here. We're literally dangling here. So, I mean, whatever it does, we're going to see it on a small time frame. All right. All right, Dobbs, I'm out of here.
All right, guys.
You guys have a good one. I hope it helps out.